Welcome to the Daily Stock Review. Today we're going over Canadian Pacific, Kansas City. Goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an individual investor on the journey, just 2,500 hours in over the last 7 years, and I'm sharing the lessons along the way. So we're going to go straight into stock analysis. This is my investing process. Today we're going to go over where to look and how I came across this stock. Then the 5-minute check to do before we waste any time on a stock that isn't worth it looking at further. Learned from these guys. They did pretty well for themselves, so I should definitely follow in their footsteps and try and achieve some of their success. So let's jump straight into it. What I'm looking for to perform this check is just grab out their annual report. So I've gone to their website, grabbed that out, downloaded it. I'll tell you what, it took a while, and these first few pages are very image heavy, which causes it to lag quite a lot. So let's just have a look. What does this business actually do? But first of all, came across this business whilst doing a lot of research on Warren Buffett and other great investors. A lot of them have invested in businesses that have assets like this. And so this ends up being a very strong moat, which is a strong competitive advantage around businesses that keeps them from getting attacked from competitors. And so businesses like railways that own the actual railway lines and the infrastructure for that gives them effectively like a toll booth. So if people want to get their products from here to A to B, they need to pay this company a certain amount, and they have a lot of pricing power. Now, Canadian Pacific, Kansas City has a very interesting tagline. So it's linking Canada, the US, and Mexico. So it's pretty extensive, and it's really good from going from one side of Canada to the other and right down to Mexico. So let's go and have a look at the financials, which is where I want to do these checks. And I'm looking for mastery. So has the business mastered its customer? I want to see, are things increasing in terms of, reaching more customers? That would indicate that they've mastered that. I want to see that there's a moat around the business. So how are the margins of the business going? And then I also want to see if management is being rational without spending the money within the business. So are they investing in long-term for the business, which is going to help those long-term shareholders? So let's have a look. We've got revenues here. We've got freight, non-freight. Non-freight's negligible. But what can we see? So it's gone from 12, and that's in millions of Canadian dollars. So 12.5 to 14.5 to 15 billion. So revenues are increasing, and that's good to see. Now, what do we got for operating income? So this would be our operating margin. We've got 4.3, 5.6. All right, so still increasing. Costs are fairly consistent. Where's our net income at the end of the day? So we got 3.9, 3.7, and then $4 billion from sales, pretty much, of 15. So what do we got? 15 and 4 there. So we're looking at what, roughly about a little bit under 30%. So 25 to 30% net income or net margin at the end of the day. That's a pretty strong moat around the business. So it does have significant pricing power. It obviously can't price itself out of the market completely, but it's utilizing that price advantage to continue to grow that cost base. All right, net income. We've already done that one. Balance sheets. So for a business like this, we'd expect it to have some significant assets. So cash equivalents is pretty low. They're just obviously accounts receivable takes up most of those current assets, stuff they need to pay. They're expecting to get in the next 12 months. or that they've got outlaid at the time of this report. Investments is a small amount. Properties is significant, and goodwill. So goodwill usually comes about onto a balance sheet when they've purchased a business that was above a market rate. So if we wanted to have a look at that and go back, we'd see note 11 and note 14. We could have a look through what did they actually purchase. Obviously, it hasn't been written off, so that goodwill can sit there. Really, it just means they've, according to financial, gap reporting, they need to put this figure down here in the assets. Does it actually mean anything to the business? Not really. As long as those assets are actually producing cash to the business and they've providing the expected cash that the business and shareholders would expect, that's the sign that we want to see. Do we get those results? No. It's usually pretty difficult. It's only rarely does a company put those kind of details in. And it would be a really good sign if they've done an acquisition and then came out with how that acquisition has performed 3, 5, 10 years later. Because a lot of them just fade into the background and don't worry about it. But it actually shows how good the management team is in performing their job. Good old synergy. All right, so total assets gets to $85 billion. Total liabilities is 39. Majority of that is sitting in long-term debt. So this business has got 20 billion there. And we'll have a look at that as we go through note 17, 18, and 20. All right, we want to have a look at the cash flow statement. This helps understand if the management team's being rational with how it's spending its money. So our net income, which is from the top of the income statement or bottom of the income statement, comes out here. It then gets adjusted. We got equity earnings of Kansas City Southern, note 11 and 12, which links up with remeasurement loss of Kansas City Southern. So that's in previous. So I'd say the acquisition and the goodwill that's sitting on that balance sheet is potentially related to this bad boy. Canadian Pacific buying Kansas City. All right. So what I'm looking for is this number here, which is our net cash provided by operating activities. So this is pretty much the engine of the business. How much cash is it generating? And then from that point, it needs to then invest that money. So additions to properties. So this business is spending roughly about half of that cash that it gets to acquire new properties. So this business wants to lay more track. And the more track that it has, the more ability that it's got to bring in more cash in the future. That's its moat. So where it invests this money is incredibly important long-term to the business. And that's a good sign. What else have we been up to? So purchase of common shares and issuances of long-term debt, excluding commercial paper. Well, this one's an interesting one. So the business has made 5.3 billion. It's then bought 3.1 billion of property. So pretty much it's got, 2.2 left. 2.2 billion to spend. Now, what's it going to spend it on? Well, they've had a couple of little bits and pieces here that they've had to pay out in terms of debt. But what they've done is then they've purchased common shares. So that decision there, it really depends on what the value of the business was at that time. Because if they've overpaid for it and they've issued more debt, they've got $3.1 billion that they've just bought. So effectively, they've bought some debt and they've bought some common shares, the balance of, pretty much. Look at it how you want in terms of cutting these numbers. You know, they might have got the debt to pay for properties, but at the end of the day, in the same time that you buy 3.1 billion of debt, and then you buy 3.9 billion of common shares in that same year, it's all coming out of the same bucket of money at the end of the day, the big bucket, which is shareholders' money. So unless this was extremely favorable with a low interest rate, I have no idea why you would want to do that as a business, except for the reasons that I've just said, that business is extremely undervalued. It's an opportunity of a lifetime, and it makes sense to pay interest for the next however many years that term is on that debt. Do we want to go into it further? Look, let's just have a look at what the share price is doing. So we've got over the last 5 years, and during 2025, the stock price is sitting down here. Most recently, it's gone up to effectively a PE ratio of 28. Now, this business does generate some significant cash. So it's not like a business that's, earnings is net income at the end of the day. So price to net income. And we'd expect it to be pretty healthy PE ratio. If this was down around 15 or 10, there'd be a drama. Now, was it down there during this time? Look, potentially, but it's only gone from about 100 up to 130. The general trend of this business over time has been growing. They obviously thought that they could gain favorably during that depression while it goes back to a steady state. This business has been consistent. We can see that there is a bit of a gap in that 5-year period right here, but we'd expect the real underlying and intrinsic value of the business to be cruising along up here. So is this business worth looking into further? I'd say it's a business that has slow and steady growth. Just like other railway businesses, it just becomes a matter of looking out for opportunities at these large businesses to get into. So for instance, if there's a big epic meltdown, if there's some really unfavorable news around these businesses, it may give the potential for being able to invest in these businesses at a low valuation. And then over 3, 5, 10-year period, you'll be able to pocket the difference. Now, if this business is just growing at a steady 5% per year, the only way that you're going to be able to get anything more than that is obviously if the business starts to increase its share of or increase its investing of those properties in the future, or if you buy it while it's lower than its value and it gets to appreciate over time back to where that intrinsic value is. All right. So if you like this stuff, I'm doing these reviews daily. You can check these out and subscribe for that. If you've got any questions on how I'm analyzing these or any quick reviews about what you guys are doing or what stocks you guys are looking at and you'd like me to have a look at, feel free to drop them in the comments as well. I'd appreciate it. And it'll help our growing audience to help understand investing in a better way. Now, if you'd like to check out this next video, YouTube gods think that you'll like it. Cheers.